Ladies and gentlemen, welcome to our weekly investor update. I'm your host, Rachel Curlew, AVP of Investment Banking. We're happy to be back to bring you another episode of our Investor Update series. Joining me today is my co-host, investment advisor, Laurel Wallace. Welcome to the program, Laurel. Today we'll be discussing General Accident Insurance Company and Lasco Distributors Limited, and we're excited to share these insights with you. If you like the content, don't forget to hit like and share this video. If this isn't your first time here, then be sure to subscribe and hit the bell to receive all notifications. We upload content like this once per week. Also, if you're looking to embark on your first investment journey, you should take that first step with Mayberry. Follow us on social media to learn about how you can get started today. So I'll kick it off with GENAC, and then I'll hand over to Laurel to discuss LASD. GENAC is a prominent insurance provider in Jamaica specializing in property and motor insurance. With over 40 years in the industry, they have managed to establish a strong presence, capturing around 24-25% market share locally. It's one of 3 listed companies on the main market, with a market cap of nearly $7 billion, ranking just behind Guardian Holdings. Today, we're seeing where the stock is trading at a price of $6.78 and a corresponding PE of almost 16 times, which is higher than the main market average PE of about 10 times. So yes, the stock is trading richly. So let's see what's driving this price. For the 6 months ended June of this year, the company booked insurance revenues of $5.4 billion. That's a 15% improvement from the $4.7 billion reported last year. However, we are seeing that their expenses rose at a quicker pace, with insurance services expenses climbing by 23% and net reinsurance expenses increasing by 14%. Despite a 25% improvement in net investment income, the company recorded net insurance revenues of $339 million, a 32% decline from the $500 million reported in 2023. We noted a material increase in other operating income to $153 million, but again, other expenses rose at a quicker pace, which resulted in the group booking net profits of $159 million as opposed to $246 million reported last year. That reflects a 35% decline. Examining the balance sheet, the company's total assets grew to $12 billion, up from $9 billion in 2023. This was driven by increases in receivables and cash equivalents. The company has about $1.5 billion in cash, which indicates strong liquidity management and a healthy reserve to cover claims as they arise. Shareholders' equity also grew to $3.7 billion, up from $3.1 billion in 2023. Meanwhile, liabilities surged to 32% to $8 billion, which is primarily due to a $7 billion increase in insurance contract liabilities. While this rise in liabilities is significant, it reflects GENAC's effective risk management, indicating that the company is adequately provisioning for future claims and associated costs with those claims. Examining the quarterly profit graphs on the other slide, it's evident that Q2 profits are lower than those from the previous year, but higher than Q1's profits. We highlighted that the dip in profits can be attributed to rising expenses, but the growth in insurance revenues that we are seeing reflects the company's resilience. But ongoing monitoring of expenses will be crucial in maintaining their profitability. If GENAC can successfully manage its risk and expenses while capitalizing on its market position, it's likely to achieve ongoing growth in the insurance sector. Additionally, we are also noting some seasonal trends in Q4 profits, which we're seeing here is typically higher than those of the other quarters. This is normally due to year-end adjustments for profit commissions. So I anticipate that the company will close out this year again with strong Q4 results. But if this does happen, we may see the stock growing into its valuation and possibly closer to a 11 to 12 times PE, which could be justified. But if these expectations are not met, the outlook could shift. But overall, the company has good growth potential with strong market presence. It has a strong cash position, I mentioned earlier, which demonstrates good liquidity management, which is crucial for meeting insurance claims. But nonetheless, it's important for them to monitor insurance costs and expenses to maintain their profitability. What are your thoughts on GENAC, Laurel?
As you would have mentioned, the liquidity management that team OOI GENAC continues to do has put them in a good position for any claims that may come about, and they are positioned well to continue to grow.
Thanks for that. So, agreed, they have 7 billion in liabilities booked for future claims and they have about 1.5 billion in cash reserves. So, yeah, good liquidity management there. Thanks for that. All right, so I'm going to hand over to you to discuss LASD.
Thanks, Rachel. Today we're looking at LASD, the financial highlights for the 3 months ended June 30th, 2024. We're going to look at the revenue. It actually increased by 0.1% despite the various supply chain disruptions. What has been happening for the last quarter in terms of what is happening in Panama and what continues to happen in the Red Sea as well has interrupted what LASD wants to do in terms of maintaining their margins. We're seeing where the nutrition, food and beverage, and hygiene lines are impacted. This has also impacted the gross profit, which has gone down by approximately 1%. The operation expenses as well has increased. So this has been caused by the increase in sales and promotion costs and the investment and technology costs. We're seeing in their Spanish Town location where they've actually put on 500 kilowatts of technology with solar to help to maintain or decrease their costs. So despite the decreases that we're seeing in the profit before operations, profit before tax, the net profit, we've actually noted that they've begun, according to what Mr. Raul and Mr. De Silva has been consistently saying over months now, they've begun to put things in place to mitigate against any disruption in the supply chain. So we've seen where they've bought property on Red Hills Road. That should be an additional 14,000 square feet of inventory space. You've seen where their White Mar location, they've added an additional 65,000 square feet of inventory space. All of this should help them to not be as affected by the supply chain disruption. So while we're seeing some negative connotations of that supply chain disruption, we believe that going forward, because of these mitigating actions that they've taken, they won't be as affected as much going forward. What this means, though, to conclude, that LASD remains a strong company. They're a cash-rich company. They have about 2.5 billion in cash. This would have been despite purchasing the Red Hills Road property for about 500 million. So this puts them in a position to continue to look for opportunities, whether through organic means or inorganic means by means of acquisition. What this means is that they're in a position to strike immediately and to continue to put things in place or take advantage of any opportunity, which at the end of the day will continue to cause LASD to be a profitable, strong company. As at the 29th of October 2024, LASD's price had closed at $4.56. Now we're seeing a PE ratio of 11.84 times, which is a tad bit higher than the average main market PE. However, the price is actually justifiable. And there's simple reasons because of, again, what they've continued to put in place to increase their margins and to decrease their costs. So with their technology improvements, with their warehousing improvements, we do anticipate their profitability to actually increase in the quarters coming up. Back to you, Rachel. Anything to add?
Thanks for that, Laurel. So LASD's recent financials does demonstrate its resilience amid a difficult environment. Although the company is encountering challenges, as you mentioned, its strategic investments and steady revenue suggest it has the capacity to manage these obstacles effectively. The stability in revenues we're seeing despite the supply chain disruptions just underscores LASD's ability to maintain stability in a tough market. Once they focus on their operational improvements and cost management that you alluded to, that's very crucial for them moving forward. So once they have that done back, I think LASD will be on a good path to improving their profitability. And that's it for today's discussion, viewers. I'd like to thank you for tuning in today. Your support is always appreciated. I'd also like to thank my co-host, Laurel, for contributing to today's discussions. If you're curious about updates on our virtual investor forum and updates, then follow us on social media. We share our live stream dates and upcoming guests on our official social media pages. Give us a follow and stay on top of all things forum related. Also, don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe and remember, wise investors, slow and steady wins the race. Thank you.